Good evening, everyone. My name is Paul Young, and basically I'm just going to run you through a video or a recording basically in corporate taxation for Canada. The reason why I'm doing this video is there's an election coming up in October, as most of you are familiar with, and it's really about a direction of a country. And basically you've got three parties fighting for your votes. One's the NDP, led by Thomas Mulcair. The other party is the Liberal Party of Canada, led by Justin Trudeau, and the incumbent party, led under the leadership of Stephen Harper, as the Conservative Party of Canada. Now, overall, every party has a little different way they like to pander for votes. The New Democrats and Liberals tend to like to play with games with people's minds in terms of corporations. Now, you're always going to hear the conversation about these corporations are nasty corporations in terms of social or corporate welfare. In other words, is they don't return anything to a country or help social programs. It's this whole thing about the messaging around corporations. What I'm going to try to illustrate with this presentation is the impact of corporate taxation, both the direct and indirect taxation that impacts basically day-to-day lives of people. And that's really, when you look at things in a perspective, you're sitting in your house, you're sitting with the roof over your head, you're basically contributing to CPP, you're investing in RRSPs, you're basically putting your kids through school, you're actually going to healthcare, or your kids are in secondary school. All those things have to do with both taxation of money and your ability to invest and get returns. Corporations all play a role in that, from the time that you save money in the investment side on CPP or RRSPs to the point of time that their taxation goes into a general bucket that's used to fund social programs. So before you get your nasty hat on, say these corporations are nasty, you should understand what they do. Now here's an example I wanted just to illustrate to you. Now typically in Canada, corporations pay basically two types of taxes: a provincial corporate tax and a federal. On average in Canada, the federal corporate tax and the provincial tax combined is 26.5%, or about 27%. If you look at the tax brackets in Canada, okay, you're looking at basically rates between 22% up to 33%, with the highest marginal bracket being 46%. So corporate taxes combined with provincial and federal taxes, if our highest bracket is 46%, our corporate taxes are 26%. So they're almost near the middle pact of taxation. So corporate taxes are almost in line with what you tax somebody at a middle income level. The reason why I want to bring that up, because I think it's important to understand that corporations are paying taxes at a middle thing. That's just that direct corporate tax. That doesn't include CPP, they're matching. It doesn't include EI portion. It doesn't include any excise or import tax or duty. It doesn't include property tax. It doesn't include consumption taxes. They have to pay that tax in terms of reselling it. So you're going to hear a lot of things about these nasty corporations, but what you really need to understand is they have a role to play. Now, when you attract business investment to a country, it's not just about taxation rates. It's a multitude of things that bring somebody here. One, what do you have an offer as a country in terms of resources, labor market, from education to close to resources, whether that's minerals, metals, oil, gas. Where's my customer base? So who am I exporting to? If 80% of my customers are in the US and I want to attack that, how can I reduce my shipping costs down, and where should I manufacture that goods? Okay, so a lot of that case is coming into basically a couple things. We're hearing a lot more of near sourcing coming in, which means is countries like China that were very cheap cost or low cost producing in the 90s now is moving back to North America because they want to have more control of the supply chain, as well as the costs are increasing between shipping and labor cost are making it more and more expensive to deal with those countries. So that's one of the things you want to do. The federal government itself, in terms of setting policy, it only has control over certain policies, and that's taxation to a certain level. That's federal tax. That's usually the payroll taxes you're talking about, CPP and EI. Okay. Now some provinces go alone on their own pension plan, and they'll have to manage that accordingly. But basically, the government runs the payroll taxes. Okay. They also negotiate trade and investment deals. So that's done at a national level. What the government doesn't have control over is resource management. So that means refining and extracting metals is a responsibility of the province based on the Constitution changes in 82. That's something you don't hear discussed very often. What you do hear from Thomas Mulcair, and along with Justin Trudeau, is they don't like these oil sands because politically they're pandering for votes. They're trying to appease that green vote, so they're really just looking at that green vote and saying, you know what, we want to get that green vote, so let's look at and show the people that we're against anti-oil. What they're not telling you is that resources being extracted or mined are provincial matter. So likely what they will do if they get into power, and I would be very concerned if I'm somebody in Newfoundland, somebody in Manitoba, because Manitoba has some fracking down to lower Manitoba Saskatchewan border, Saskatchewan, even BC, even and mostly Alberta, that has anything to do with oil and natural gas. Because why? Because those are targeted industries that the NDP will likely look at cap and trade, or likely put more standards or things in to make it harder for you to do business. So they'll change the rules up and basically tell the provinces how to operate, whether that means GHG, which is greenhouse gases, or they may just make the permits more difficult to get. So you got to ask yourself, okay, what government's going to watch the environment and also ensure they promote growth? Okay, we need exports in this country. We need that revenue from the exports, right? And I've talked about this in previous presentation. They drive the taxation here. The other thing that's out of Harper's control of attracting business is hydro rates. In Ontario's case, Ontario has some of the highest rates in North America. 20 years ago or 15 years ago, when Mr. Mike Harris was in power, we had a very competitive hydro grid. Was it perfect? No, it needed to be refurbished and replaced and upgrades, but it didn't need to go to a green energy process where projects are identified not to be feasible, but basically push forward for their own internal agenda. So you need to be very careful how you manage input costs, in this particular case hydro rates. Okay. The other thing is Ontario wants to go along with their Ontario Registered Pension Plan. That's another cost that's going to add to business. I just want to kind of illustrate that when you're looking at things, it is not one factor that attracts business. It's a multitude of factors, including a government that's stable, that they trust in terms of policies. Now, the NDP itself seems to continue the backpedal on corporate tax. Initially, Thomas Mulcair was interviewed. He was interviewed with doing a presentation with Uniform, and his direct quote was, "I'm against corporate welfare and I will increase taxation." That's fine. He's entitled to his opinion, but that's where he stood on it. Now, that was an audience of union. So why is he pandering to them? Because he wants their votes, and that's where their union backing came from. That was in September 2014 that he said that. Early on, in June 2015, he got up in front of a business community on Bay Street and basically started talking about taxation. That you will have a partner in Ottawa. That was his quote. But then he was incoherent and couldn't even tell you what corporate tax rate he would use. He did say that it would be middle of the road of the OECD, which is basically developing countries of how we measure ourselves against. Canada is not. Canada is ranked in the low end overall taxation. They're not even in the top end in terms of its taxation competitiveness when you compare that. The other thing that Mulcair doesn't understand is we need to be competitive with our U.S. counterpart. 75% of our goods still flow with the U.S. Our supply chains are very integrated with each other. Yet he ignores that. Why? Again, he's pandering for votes. He doesn't really care about how economics work and how policy needs to have multiple angles to it to be effective. Now, the other thing that basically with this slide here is just kind of illustrates you certain aspects about Mulcair basically promoting things. He also talked a bit about corporate tax and breaking it between small and a medium to large corporate tax. So in the budget of 2015 to 2016, Stephen Harper's budget, he basically has a plan to take the small business corporate tax rate from 11% down to 9% over a period of time of 4 years to kind of bring the corporate tax rate down for small business, but make sure that the Treasury isn't hindered by a reduction in the rate. So he wants to make sure that he has the right match in terms of the revenue. Thomas Mulcair will actually do the same thing. He's actually going to bring it down, but he's not committal in terms of the range of time that he's going to do it. So he's basically copying the same plank that's already in the budget. It's already been supported. The other thing that he doesn't talk about as part of the taxation policy is that in Canada's case, only about 40% of the businesses in Canada are small business or contribute to the GDP. I should say only 30% of the businesses contributed to 30% of the GDP is small business. So really, by reducing taxes and putting all that focus on tax, is he really helping the overall scheme of the job creators in terms of foreign direct investment? Is he really looking at a coherent strategy that makes sense, that's going to support businesses? Or is he just penalizing people because he likes small business? Now you need to be very cognizant of the way the NDP operates. They have tunnel vision. They typically only look one angle of policy. They never go beyond their core roots of dealing with unions. So therefore, they're going to focus on things that they think they're doing the right thing. If you go look at the track record of the NDP in the last 10 years, they haven't done that. So you need to bear that in mind as well. So let's look at basically corporate tax. So in the 2014 budget, corporate taxes were $35 billion. Okay. Now what I did is here in this particular chart, I want to illustrate. Okay. So if we get this bucket of general revenue of basically $35 million in corporate taxes, a portion of that corporate tax is basically going to go into this bucket to pay for health transfers. That's the HST. Social transfer, Canadian social transfer, that's for daycare, that's for post-secondary school education, equalization. It's going to go all into that. So what I did with this to illustrate this is I pulled out basically the government taxation of the 101,241 in terms of the total taxation, right? Now the EI fund itself basically goes in a dedicated fund. You have to ignore that. But the other stuff like taxes and duties and corporation tax are all part of basically looking at, are part of going into a general fund. And when you think that's going into it, you're basically looking at almost a third of the taxes that the government's collecting from corporations is funding social transfers. So all these nasty corporations that you do not like are contributing directly to your healthcare system. They're contributing to your educational system, post-secondary school education. They're providing daycare spots. Now, Stephen Harper has no control when that money gets down to the provinces, how they spend it. If they don't spend that money in a prudent and efficient way, how is that Harper's fault? It's not. So you need to bear that in mind when you're listening to the conversation. Now let's talk about an example. Let's talk about a small business corporation. Typically, they measure by employees, but I'm going to use revenue here. Usually they're pretty hard in terms of revenue. They have very difficulty with selling price unless they're in a niche market. It's very competitive. So I'm just using annual sales of basically 15 million. I'm using total cost. That means cost of goods sold. That means labor. That means payroll tax, rent, vehicles, and all that, to come up with basically $2 million in taxes and $2 million in basically net income. And basically, I've calculated a corporate tax rate. Okay, so basically, I'm saying $650K is what the government will receive from the small business in terms of taxation. Okay, and then their net income after tax for a small business might be $1.35 million. So some of that he may be able to take back in terms of a dividend or redeploy in a business. So you can see with this particular example that the small business itself is going to struggle in terms of the amount of time he puts in to its return. So you can see why the government wants to target this, because they feel they're part of a good job creation, which they are, but he wants to give some of that money back to them. Let's talk about a large corporation. Large corporation probably has about 110 million. We'll say cost of 20. Then you basically have got roughly in there basically 20 of net income. But typically at 15%, they're paying $3 million in corporate taxes. So their after-tax profit is $17 million. Now let's talk about that for a second here. Large corporations tend to have pension funds. Now let me give you an illustration how pension funds work. Okay, you have what's called institutional pensions. Basically, they go out, they buy up company shares. Okay, that's got a good return to kind of maximize their returns to make sure that they're getting a certain amount of return on investments. They invest in corporations that are publicly traded. These are the publicly traded corporations that Thomas Mulcair dislikes. He doesn't like them. But he never tells you that he doesn't. He tells you that he dislikes them. But what he doesn't tell you is how they influence pension funds and how they influence the existence of small business. Can small business exist without large corporations? Can they? If they're look at a sector of small business. What do they focus on? Plumbing, electrician work, restaurants, retail stores, maybe a franchisee that's attached to a franchise, like Tim Hortons. Tim Hortons basically sells off the franchisees. It's those people. Okay, so think of that. If I'm a service sector thing, I'm supporting somebody else that's working, whether that's government or the private sector, large, medium corporations. So if you don't treat every corporation the same way, and you maybe give certain other benefits down to a small corporation because they don't have the access to capital a large corporation would, you need to have a clear, distinct process that makes sense. And you're not getting that from either Justin Trudeau or Thomas Mulcair. What you're getting is an inconsistent statement. Let me talk a little bit about how corporation tax policies work. Because really what you're going to hear, and it's been consistent messaging from the NDP and the Liberal Party down to their followers. Cash hoarding. Everybody says, wow, that's bad news. Like all this corporate tax cuts that Stephen Harper gave the corporations, they never reinvested it in the business. You're going to hear that, right? In essence, corporations that deal globalization, have different options to move income around between entities. That's how it works. If I have foreign subsidiary companies and I'm trying to expand my business, I have to create a corporation typically in that country to do business with, or a partner. Typically, they use corporations. So I'm selling the stuff there, I move things around. That's what we call is tax planning. It's all legitimate, it's all legal. But the bulk of that cash hoarding is with very few countries. Like 60% of the cash hoarding by companies is with companies that are about 30 or 40 companies. So the rest of the cash hoarding is with the rest of the Fortune 500 and above companies. So really, are they hoarding a lot of cash? Not likely. The second thing with cash hoarding, at some point that money has to be dealt with. So what you probably see happen, and this has happened in Ontario's case, is the government got together with Cisco to basically open up R&D centers for technology. Realistically, all Cisco was looking for was a way to repatriate cash at a lower rate. They don't really care that you got an educated workforce. That's part of it, but they don't really care about that. They were looking about ways to bring cash back into North America at a lower tax rate. That's what cash hoarding is about. It's about investing and moving things around within legitimacy in the Income Tax Act. Now, if Thomas Mulcair had said, you know what, I want to look at tax avoidance based on the globalization rules to try to eliminate these people using the income tax rules to move things around, that's one thing you could say. But he's never talked about that. He just talks about these corporations holding cash, that tax cuts don't work. He doesn't talk about the process. Why? Because Thomas Mulcair isn't an economist. Thomas Mulcair isn't a tax accountant. Thomas Mulcair never worked in business. So he's trying to provide advice to people that he's the right person. He has no clue how it works in the real world. So if you want to trust a guy that spent his whole time in the public sector, that came from a silver spoon, that's up to your call. But you need to look at the facts of how things work in reality. Now, let's look at taxes in the G8. Okay, Canada Canada is very competitive worldwide in taxes in the G8. Basically, if you look at the G8 ratings for taxation and compliance and all that, Canada's rating is pretty well in the top 8. So Stephen Harper's helped with a lot of things in terms of filing and paying taxes and help things better in terms of the overall tax process and regulation. He's improved that. And this chart shows you that their overall rating for Canada in 2014 was 8. Look at where the US is. They've got more of a complex system, and they're 64. Look at it. You're seeing there. So who's got a better tax system overall? Are there things we need to do with the tax system here in Canada? Yes. Do we need to look at certain tax codes and certain other things? Yes. But that's never discussed by Thomas Mulcair. He doesn't care about that. If he did, he would talk about it. He doesn't want to go into details because he doesn't want people to know that it's not a simple fix. He just wants people to know that he's for you. He's a strong person for you. Now, the next example I want to show you is Loblaws. Why did I pick Loblaws? Because Loblaws is typically a Canadian corporation that typically has most of its holdings in North America. Look at its sales. Look at its basically operating income. So it went $31 billion worth of sales. Look at what it has. A measly operating income of $1.1 billion, or 3%. Why? Because it's retail. Look at the taxation that they get, the government gets here. $210 million in corporate tax dollars. That's direct corporate tax dollars. Look at the rate they're getting, about 25%. Look at Canadian Tire now. Canadian Tire is another one. Look at their effective tax rate for 2013, 28.1%. So again, they're paying close to what we said is about the middle tax rate. I want to bring your attention to this slide here. And this basically shows you the tax competitiveness of countries. You constantly hear about Scandinavia countries. Finland. You hear about Sweden. Okay? The Canada should have a tax system similar to that. Look at where Sweden's corporate tax system ranks. It's number 3. Where does Canada's corporate tax system rank? Number 19. So if you're going to compare countries and say, oh geez, we should do it like them, shouldn't we have a corporate tax rate the same way that process that Sweden has then? Shouldn't we do that? Because that's what Mulcair said, and that's what a lot of you people think, that we should be like Scandinavia. But look at where Sweden's taxation is made up in. Look at where they rank individually in taxes. So they charge a higher personal tax. They're ranked 21. Where's Canada ranked? 24. So Canada's pretty similar to terms of Sweden in terms of its personal tax rates. So you need to bear that in mind. Look at where the US is. They're down bottom end of the scale. They're ranked almost last. And look at them. From the individual tax rates, look at their corporate tax rate. Corporates. 33. So you could see Canada, in terms of its competitiveness, it's pretty competitive with the US, Japan, China, and Spain. But is it competitive with countries like Norway in terms of taxation? Is it competitive with Luxembourg? No. So people keep talking about Canada and say, you know what? Canada should be like Sweden. If that's the case, shouldn't we have lower corporate taxes then? Shouldn't we pay higher income taxes? And yet Canada's middle class is one of the best in the world. But you don't hear that from Thomas Mulcair talk about, because he can't win an election on that. That's basically what I wanted to cover on taxation, right? I wanted to cover all different angles on corporate tax to basically kind of give you the perspective. As I said, there's more to taxation for a corporation than just corporate tax.